This is Elliot Wave Sage. I want to go ahead and do a market update. Like always, none of this is financial advice. Always do what's best for you. So last week, the market was acting very erratically. It was very tough for a lot of traders. I still think that the overall direction is still lower, and a lot of people that are pushing the market higher are really going against the grain. Swimming upstream against the current, and like if you try to do that, it's a very difficult, to make any progress, and that's what happened. And I think on Friday we really got a very significant bearish reversal because there was a chance that if we could have got more follow through on the upside Friday, as you could see, we could have broke through this downtrend line, and then being able to take out this pivot could have actually opened you up to a new high, which could have also opened you up to a 5 wave move from the lows and not a 3 wave move. And that would have been super bullish and pretty much could have confirmed that the bear market is over, in fact, even though of course once you get that fifth wave we would pull back. So the bears did what they needed to. Now we need some more follow through next week, and we'll see if we can get that on into the Fed meeting. So right now, again, if you look at kind of the count, we have three swings up in this two. We come down in five here, and then we have another three swings up. Respecting this downtrend line, it gets rejected, and now this looks like this impulse should be finished. We could see a counter trend rally. Knowing that we love to have these massive rallies, I wouldn't be surprised to see it even do something something really steep, and then that, So I think the market, if you're trying to be, this kind of short-term trader, is tough. Is tough, but there's no guarantee. So what I just like to do is continue to ladder in short positions and three-wave pops like we had here, 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 and then let the market eventually come down to these areas. And that's why I said you need to keep the bigger picture in mind and have an eye on the prize and not be trading a lot of this noise, daily volatility, unless you're going to get in and out the same day, and then don't hold overnight. So this is kind of what the market is. So this count, so I'll just kind of step back for a minute. The SPY, bigger picture. I'm looking at it, looking at these as overlapping waves, which is okay for A, and then a three-wave move that finished, and now we should head down and could see 324, SPY 313 in the coming months. Now, if the bull case holds, there's always a possibility the B wave can extend to 511. That would be about, we would need a bounce at 428, followed by a massive rally, then followed by a 2008 style crash all the way back down to 310. So we don't know what's going to happen. That's why I have this box highlighted, because this is a very important area to decide the fate of the market. A major move will happen here. Either we'll probably bounce, and then either the bounce will fail and be a massive crash, or the bounce will rally to these highs. So I do think a bounce will happen, and then we need to look at other clues to see where we are to decide which path the market will take after this area is reached. Of course, the surprise move, which is still unlikely, is the 1987 move, where you just have a massive one-day crash and you're down in the 360s in one trading day, and then you blow through this box. That's still it's a remote possibility, but it's still not, the analog is still not negated. Here's the analog for the Dow, and just like in 1987, you had a truncated bottom, even with RSI divergence reset, but it truncated. We came out of a consolidation area that had a false breakout. We came back within it, and see, we're still above it. But in 1987, once we got back below this, and like for a few days below it, then it just ended up down here in one trading day. So the 1987 analog would be the danger area is really right in this area that I have circled. When the Dow reaches this area, technically, then if that situation will develop, that will be the time it would happen. So keep an eye on your price, keep your eye on these levels, and that's why you just don't know. One trader also talked about a horror story of circuit breakers. If you're in 0 date options and the circuit breaker's tripped, you lose all your money. Because, if you're not in the money, you lose all of it. So the story I read was, he had, maybe 75,000 he would scalp each day in these short dated options. And normally you feel like, yeah, you can get in and out of your position, but the day you go in one, and then the day the circuit breakers hit, the market's closed, and then you can't close your call or your put position if it's not in the money. You don't get any time premium, it's gone, you lose all your money, and the casino takes it. So just remember that if you're trading these options, if we are getting into circuit breaker territory, once the day's trading's done, if we hit a massive circuit breaker, you have any money, you won't be able to close out positions that you may be in until the next trading day. And then, of course, if you're in a call or put that happens to expire the day the circuit breaker's tripped, then you're in a lot of trouble. So just keep that in mind. Let's go back to a couple charts real quick. Let's look at technology here. So technology is in the same situation, pulling back in a 1-2-1-2 now. We've broken the uptrend again. We're back below it, and it was trying to be defended pretty vigorously here, and then it finally just couldn't do it. So here we are, and want to see this cycle failure at 369, which we should get, and then that should open up more downside. And again, just like all the other indices, this is the moment of truth. In this area I have highlighted, we should bounce here, and then what happens after that will determine the path. But don't be surprised if we do end up down in these other areas at 235 triple Qs. So this is where we have going on now. The triple Qs back in the .com era is a very interesting thing to take a look at. Let's go back in time and just kind of see a couple points I want to make. We can get rid of this. One, though, you do need to be careful. The connector wave formally broke down in the end of September. We're getting to the end of September. It was an earnings warning, and that was all the market needed to finally collapse. So we are getting to there. So just keep an eye on that as earnings starting to get looked at. So here you could easily see here you had, some kind of 5-wave move. So again, if you're trading Elliott waves, you would have been completely fooled here, right? I mean, look, you have a classic 3-wave move down, and you have 5 waves up, right? So someone could have said, "Hey, you know what? This is the bear market's over. We have 5 waves up. Great." Or you could have even made this mistake, right? Like that. And we're going into a wave 3. Load the boat. And look, we even broke the high. You see that? We even broke that high. So, if you look at this setup, this is what's happening in tech right now. There's a lot of things that look like 5 off the bottom, and I can label them just the same way, but in the end we ended up lower. So the point of this story is these corrective waves have a lot of different ways that could be labeled, but this one, the right way to have labeled this one, was a W, X, Y, Z. So that's the labeling I see throughout technology, but nobody that does Elliott waves dares say that. But I will say that, and then this was just a massive bear flag that broke. So let's take a look and see what we have going on. So we see these in technology. So that's technology has that fractal. So you come back here and you take a look at the NASDAQ futures, and you kind of have a similar situation developing. I got a bear flag. You got 1, 2, 3, 4, 5. It looks like 5. Oh, it's done. There's the bottom. But no, I believe it's in another WXYZ pattern, and the flags looks like just broke down. So just keep that in mind. If you're completely relying on that, don't be too bullish. Coming out. Uh, this one is a lot easier to see. I'm looking. So you can't really make these mistakes with the SPY and Dow Jones this time. I think the SPY you could be susceptible to a mistake like that, but anyway, I just want to point that out. You need to see, a five-wave move can also be a WXYXZ, and you have to look at other dynamics within the market, where the market's heading, and also the RSI sequences to give you clues. Um, okay, so that's the market. So the market should go lower next week. We should see it go lower um, to either finish this impulse and then counter trend back up and then crash towards the end of the month, or we just crash. But I want to be on the short side of the equation here, but I don't want to just market, you have to wait for these rallies, these fake pumps, and really that's all that happened here on Friday was just on Thursday was this IPO. Just they need a green market, and I think the Instacart IPO is coming, so maybe expect the same thing on that day of that IPO. We don't know, but anyway, this is where we are. So then, looking at China again, China's weak. China should still have more downside into this area I have highlighted. We break this low, then we could see an epic collapse in their market. Bitcoin is trying its best to stay supported, but now it's just still in this B wave connector here that I have shown. And this should be in the short area, or was in the short area right here for this pattern that I have. So this is morphed into different patterns. That's why the shorter time frames are always hard to trade, but overall the direction should be lower. We can draw this downtrend line a little bit better. Draw this a little better here. And I just want to get a majority of the points in. So there, and that's where it got rejected right there. Okay, so that's the line. So if it could push up convincingly through this downtrend line, then this is a bigger connector for this leg down, and then we could even see it come back up to 28 or 29,000. So this is just again trader battles, but ultimately we'll be down here later. Oil's the talk, right? Tons of media attention. But if you followed me, we saw the breakout, and we called this a lot earlier here, where oil was going to now head. And I still think we have a destiny for $96 to $100 oil, and we want to keep an eye on the RSI, see if divergence is erased. We could push even higher than that. But I'm thinking this is kind of where the target is, and then we should have a catastrophe in the oil market at that point with the stock market. So should I be FOMOing in the XLE and all these other energy stocks? Hell no. Those things are either, some of them may have already turned in anticipation of this turn, but they will, and the commodity is going to get massively dumped. And I believe this will happen the same time the long-term bot rates hit the target area here for their wave 5. So when wave 5 hits on the 10-year, I would expect to see a massive drop, and I believe that could be a massive drop in the stock market as you get this massive risk-off move. Some news will cause people to flood back into treasuries, and as panic sets in, and also just dip buyers come in out of the market, and so this to me, this is the choppiness, the top in process. But when we hit these areas and get this move, this 3-wave move back down, maybe even going back to 2.5, and oil gets up to this area and gets rejected back down, those are going to be your sell risk off massive moves lower in the market. So I think for market timing, I'm not worried about a crash until the oil is in this area that I have highlighted, and the 10-year is also in the area that I have highlighted here. When those two things line up, then I would be more worried that a much bigger disaster could happen at any moment in the market here. Because as you know, in March 2020, the treasuries really had a massive sell-off here in its three-wave move. Okay, so we came down and it was right around here, right? This final dump here. So we know the treasury can really pull back in a risk-off setting in a panic, a true panic. So just keep an eye on that. The VIX, it did break out of its downtrend line here, indicating we are in the next leg of the bear market that in the shorter time frame, the first leg, and now we're in the next leg higher. And 2-year, I'm not too concerned, but the 2-year should be finished this wave 2 and should be going higher. We could see maybe a spike in the short-term rates and a dump in the long-term rates. I don't know why fundamentally that could happen, but that's what the market's telling us. This could happen here. The surprise would be this is some kind of wave 5, but it's unlikely. It's unlikely. Just keep that in mind. And then if you look at this pattern, if we break out, we should get to 6. So this is telling us inflation is going to come back, or is already back. We all know that. Look at what oil is doing. Dollar index is played out just like we expected. If you follow me, we had the wedge breakout. They tried again to push it down, and then they finally gave up. And so this ended up being a great long opportunity for the dollar, and now it should continue higher, but it is going to end the cycle soon here at some point for more sideways price action that should last weeks. It should be pretty substantial, something similar to we saw here, which lasted a couple weeks, and then another push higher, and this one could go really high. So that's probably your crash wave in the market when this happens. So then that's I think all I want to say here. So I think the market forecast is lower in the next 30 to 45 days. And at some point, the 87 analog will be tested soon, and we'll see if that plays out or not. And if it does, be a catastrophe, but you should be prepared for that. In the 87 analog, we would end up somewhere down here in one trading day. So that'd be a nice healthy gap down, gap day or whatever you want to call it, or how it develops. The other thing is, I think the day before, some of these major crashes, if we're going to have a massive crash like that, you'll get a 4 or 5% down day into it. So just look for that. Today we had one in 1.7, 1.5. If we get a 4 or 5%er Monday or Tuesday, for some reason we get more bearish follow through, 4 or 5, then we're building to something much bigger, guys. Then I would definitely not be stepping in to try to buy the dip. That it could turn into a disaster. So that's what you're looking for. Now Monday we get a counter trend rally, then okay, then fine. But you want to see it build. But once we get to that 5% level in one trading day in these headline indices, then you're on the verge of 87 or 1929 style crash, because that's typically how we lead up to that. Okay, so I'll just kind of click around and see how things are going. Commodities, like I said, I don't want to FOMO in any commodities plays right now, even though it's getting a lot of media attention at the moment. So you can see this seemed to be too short for 2. So this is probably some sideways flat structure playing out. So I'm looking for that drop. Let's take a look at XOM. Looking for this B wave to finish. Should break. We want to see it break this high at 119, and then that should do it. So keep an eye on that. Even SLB is getting media attention, so we'll keep an eye on that. I still think it's in this too. So just we'll see how this plays out. GDXD, again, eye on the prize. It's just going to be either in a double correction lower, where you can buy more, or it's already in a 1-2-1-2 setup. But we should be seeing 945, I'm thinking, soon. But if we do pull back, it's just more opportunity to buy more. And the GDX should go lower into this area that I've highlighted. And then if it does come up the 3081, that would be a short opportunity to go lower. But I don't like any of the metals. I really don't like buying any stocks right now, given the nature of where the indices could be in the next 30 to 45 days. Okay, so let's go to technology. I know everyone likes to follow that. So Apple, again, everybody's trying to long Apple to play this gap trading. You know, I don't know why gap trading all of a sudden is so big these days on the internet. Everyone has done it once in a while, but now it's like an obsession with gap trading. And honestly, I don't give a shit about gaps. Gaps to me are irrelevant. It is just, again, if you're playing poker, the other guy on the trade knows you're trying to play the gap, so you make it too easy for them to steal your money if you're trying to do that gap playing stuff. But anyway, this looks like 5 down here, and this looks like it could be another 1-2 here, right about here, and this 2 could come up again, but doesn't have to. So this looks like it has a 3 of 3 moment to the downside, and again, we should bounce here, and then more than likely we will fail. But if the market doesn't have Apple, it's hard for the indices to advance. Also, if it doesn't have Nvidia, which did break this low, so this will open up more downside to 405. No Nvidia, no market on new all-time highs. Microsoft hit the short area exactly to the penny and being rejected. So now you have 3 mega cap stocks in decline and bearish decline. Adobe's earnings, as you know, we did finish this 5, it looks like. So now this should start its descent. AMD should be ready for wave 3 lower at any moment. And then let's look at Facebook or Meta. So Meta, I would say this one's a tricky. We're not at the point yet that we could call it ready to drop, but it's definitely getting close. Looks like some kind of bearish wedge breakdown. Yeah, so this cycle's over. So yeah, so I think you could say that it started its decline in its next leg. And then Google should be peaked at any moment. Amazon looks like to me, let's zoom out, take a look at what we've got going on in Amazon. Yeah, something like that. And again, in a 1, 2, 3, 4, 5. Okay, so what you need to be watching for is like when Apple's at 157, Nvidia's at 402, Microsoft is at, let me find it here. Microsoft is at 280. Okay, the market will be supported for a more substantial bounce. The only way that that's negated is if we blow through these boxes, and there's just no and you'll see it. But if we, you know, lead up to us and then kind of hang around here, this area, the market's going to be supported, and then I would close out short positions. But you got to do what's best for you. But I won't play the bounce on the long side. I would just be on the sidelines at that point and take my money and just watch what happens, how a market responds. All right, so Tesla, again, trader battleground stock. Looks like it's still in the short area, struggling here. I'm still looking for this pullback lower, and we'll see what happens. And again, I'm not sure the obsession with Tesla in terms of making sure it stays supported and pumped and the cult-like nature of the stock, but just be careful if you're trying to you know, how can I say it, like say that this time is different, you know, this is a new paradigm, of course Tesla's going to go to infinity. Like, if the market's going to do what I think it's going to do, Tesla will be down in this area. It's going to be, no matter what happens here. So we'll see. Again, this looks like 5 waves up in your final A, your C here. So you have your A, B, C. So probably be a better way to label this would be A, B, C, like that, for a 3-wave move. But as you can see, that's in a short area, but we haven't got the reversal confirmation yet. And again, I'm sure there's tons of gap traders trying to trade this. All right, so I just want to kind of cover some of the tech stocks so you can get an idea. As you know, the Russell looks really weak. So again, we should be heading much lower. So that's all I've got for today's update. I would say the market could be on the verge of a historic crash. It's not ruled out yet. I would say the next 45 days or so, mid-October, end of October, this market could be significantly lower beyond what anyone could ever contemplate. And I know it's tough to hear that. So if you don't preserve your capital, you don't take precautions to protect your investments, and we do end up in a massive drawdown, you have to ask yourself, why didn't I take action? Why didn't I take this information I'm hearing right now and maybe do something to prepare? Why was I so, so much denial? But it's hard. It's hard to accept the fact that the bull market may be over. The bull market may be over from the 2009 cycle, or even the 1929, 1930 cycle. We just don't know the degree of which it's over, but I do believe the conditions are set, just like conditions in a forest that hasn't had a fire to clear out the underbrush in decades. The same thing is in this market. The conditions are perfect for a 1929 or 1987 style crash. They're there. Now you just need the right catalyst to light the fuse. And we have plenty of catalysts that you can think of in the next 30 to 45 days that can happen to do that. But if that is sidestepped once again, the conditions will only worsen. The market could still go higher, and then the can's kick down the road a little longer, and then we'll defer the crisis to another point in the future. But that crisis will eventually emerge. But right now, the conditions are such that the bears could really make a huge statement and do a lot of damage, given the technical setup right now that we're seeing. We're staring over a cliff, and all we need is someone to push us, and we may fall to levels that are unthinkable, that are beyond people's comprehension. But that's how the market is. It destroys bulls and bears, and we surely have destroyed bears here. And now the arrogance of the bullish side could also be about to get destroyed. But I think you won't have time. I think the way the market will destroy that side of the market is circuit breakers, opening late, not getting out of positions, not being able to hedge in time, and it'll be too late. You would have lost most of your capital before you even wake up in the morning. That's how it's going to go down. All right, guys, talk to you later.